Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased technical analysis. Now Uncle Charles has been waiting for a one trend move all week and it never came, guys. You can look at this 15-minute chart here. You can see how choppy the market was this week, and all these lines were the different support and resistance levels that I was trading off of. And you can see we had false breakouts and false breakdowns and more false breakouts and more chop. Overall, in my opinion, the market is still setting up for a big move. Okay, like I always say, the market is either trending or it's chopping to set up the trend. The trend leads to the chop leads to the trend. Okay, and we just had a full-blown chop week. All right, so can we finally expect a trend week next week? All right, and what I mean trend week is a one directional move, either to the upside or to the downside. You can see pretty much this past year we had a lot of trendy moves to the upside, to the downside. Okay, it's when we start chopping that's when it gets a little tricky. That's why I always say very important to keep that in mind, that this chop will eventually lead to the trend move that we all love to trade because it's so much easier to trade. Now, is it going to be to the upside or to the downside? That I don't know. The best I can do for you is help you identify the levels and the potential scenarios to watch out for. Basically, identify the setup. So as we know, the 407 level is very critical and it has served as strong support this past week. That is the 38.2 retracement level. The 415 level has served as a tough resistant level. We tried to break out of it a few times this week and we kept failing. Okay, so we got a range here, 407 to 415. That is a pretty decent range. So if you're a day trader and you're able to know the levels, know the setup, and just trade it unbiasedly, level to level, that's gonna be like a good area for you to have fun with your trading. Or if you're a scalper, that's scalper's paradise. Scalper's paradise all week. Okay. However, a breakout of that that range, I believe, will send us to the next trend move. Okay, so we're looking at this. We've seen a lot of similarities to the June 1st. Okay, if you was a market maker, you got to ask yourself, if you wanted to trick retail traders, what would you do if you was a market maker? Would you let history repeat, or would you switch it up and push it up to the upside? Keep in mind, we have a W pattern here, guys. W pattern, which is usually bullish. All right, we've seen similarities to June, and I have a feeling, I could be wrong, I have a feeling that market makers are not going to let history repeat itself. They're not going to make it too easy, okay? And that doesn't mean they won't push it to the downside. They might give us a fake out first before pushing it to the downside. That's a possibility. The main thing I want you guys to remember is that 407 is the bottom of the range, and it's also a very critical level based on my Fibonacci level. If that level fails, guys, I think it will send us to more lower to the downside, maybe even as low as 397. Okay, if it breaks 415, that's our sign that we could be pushing to the upside, heading to higher levels, 418, 421, maybe a little higher to the 200-day moving average, which is around 432.7-ish. Okay, those are all possibilities, so we want to be open to it and trade it unbiasedly. All right, so keep that in mind, what I just said. Will history repeat itself? Market makers tend to trick us out. Watch out for false breakouts, and keep in mind and be open to the possibility that we could go a little bit higher. All right, guys, this is a W pattern. We'll see what happens. If we take a look at the weekly chart, okay, we're also seeing there's some things to note here as well. All right, we had 3 green weeks in a row. When was the last time we had 3 green weeks in a row? That was back in March. Okay, right here we had 3 green weeks in a row before pushing to the downside. And remember, this move to the downside started with the loss of a critical support level. Okay, so if we happen to get some history repeating itself, like deja vu type of stuff, remember that 407 is that critical level, guys. All right, we don't have to call the top, we don't have to catch the top. All we have to do is catch the move as it's moving. Catch the momentum. A loss of a critical support like 407 would trigger strong momentum to the downside. Okay, all right, So keep in mind, the last time we had 3 green weeks in a row was back in March, and after that led to more downside. Will history repeat? So we're seeing some patterns similar to June. We're seeing some patterns similar to back in March. Will history repeat itself? I have a feeling it won't, but I'm also open to that it might be. Okay, guys? 407 is that critical level for us to watch. 415 is that critical resistance for us to watch. That's the breakout of the range. Anything within that range is still chop. Okay? It's still chop, and you can always choose to trade within the range. Okay? Remember, write these levels down or add it to your charts. 413, 412, 410 to 410.5, 408.5, and then 407. Those are the levels that I'm watching within the range that I'm using as my pivot points. Okay, I'm watching for false breakouts. I'm watching for false breakdowns. I'm watching for breakouts of resistance or failure of supports, and I just traded. Okay, guys? And one last thing to note is the VIX. I had a blue multi-month trend line. Okay, almost a year this trend line lasted since it started back in November 2021. We have multiple touches of it, as you guys can see, okay? And now, this past week, the VIX closed twice below it. Okay, we had a close below it back in July 29th, but we recaptured. This week, we closed below it, and yesterday on Friday, it showed follow through. All right, and I do use moving averages, the 5, the 13, the 20, the 50, the 200. As of right now, the VIX is below all my moving average. So be very careful, okay? With the VIX continuing to creep down and looking and showing us bearish price action, that's not very bearish for the SPY, because the VIX and the SPY tend to move in opposite directions. Okay, guys? So that's something to note. The VIX is looking bearish and is very bearish. And for me to be bullish on it, it needs to get back above 22.5 minimum for me to be bullish on it to maybe trigger more upside. As of right now, we lost a multi-month, almost a year trend line. Okay? So just keep that in mind, guys. Moving on to triple Q. Triple Q here. Well, we lost that trend, that resistant level at 322.5-ish. Okay, I need to see triple Q recapture that level to be bullish, with the next support all the way down around 318.5-ish, and then 315.6 is below that. All right, now there's something I want to note. I made a video a while ago about the power of the 5-day moving average. Okay, this red line here is my 5-day moving average. And a lot of times in strong trend move or strong up move, the price spends a lot of time above the 5-day moving average. And it also uses it as a support. You can even look at the most recent price action on triple Q. You can see how the 5-day moving average acts as a support. So as long as above it, the price action is bullish. And as you can see here, despite getting a pullback and some washes below the 5-day moving average, we still closed above it. All right. So I can't really say triple Q look like it's going to turn over just yet until it closes at least one time below that 5-day moving average, okay, which is currently at 319.7. All right, so just keep that in mind. All right, triple Q is still above it. I'm not seeing anything very bearish on it just yet, but I would like to see 322.5 get recaptured. It would be a good entry for a false breakdown, okay? But as long as below and we lose this 5-day moving average, which is currently around 319.7-ish, we could see 318.5 and 315.6 below. All right, guys. And last but not least, here's Tesla. Tesla lost a bunch of our support levels, and the RSI on the daily chart is finally cooled down out of overbought territory. Okay, so it closed on Friday yesterday. It closed around 864.5-ish. Okay, so I have a resistance here at 865. We can recapture 865. That would put 886.5 back in play, and above that I would be bullish, and that would put the 200-day moving average, which is at 910.9-ish, in play, and 923.5-ish above that. Okay, but if we continue to stay below 865, that keeps the 849 support level in play, and below that is 824-ish. Okay, guys, so just let the level guide you. Remember, we long breakouts of resistance and we short failures of support, and we just play it level to level. This is what Uncle Charles' channel is about. I identified the levels for you. I identified the setups, and we just traded unbiasedly. with unbiased technical analysis. One last thing before I let you go. Here is the flow sentiment, okay? Here's SPY's flow sentiment, 71% in the puts, 29% into calls, okay? So still overall bearish for the SPY. Triple Q, 19% in the calls, 81% in the puts, okay? So still overall bearish for Triple Q. And Tesla, 46% in the calls, 54% in the puts. So now Tesla's starting to look a little more bearish, okay? And this is filtered for 500K premiums or above. So we're only looking at big money. All right, guys, so thank you guys for watching. Peace.